Why Sensex has fallen over 1000 points and what investors should do. Indian markets emerged as one of the biggest losers on Monday, weighted down by several factors. What is unnerving the markets and what is the way forward? What should investors do? The benchmark Sensex at the BSE fell sharply by over 1000 points or 1.7% in the afternoon trading hours to trade at levels of around 58,700 on Monday. The markets were weighted down by concerns around rising COVID 19 cases in various countries and a sharp fall of over 4% in shares of Reliance Industries following the decision by Saudi Aramco to drop its plan to pick 20% stake in Rail's oil to chemical business. The markets were also unnerved over the government's taking a step back on its reform agenda, as it yielded to the protesting farmers and announced that it would repeal the three farm laws in the upcoming winter session of Parliament. What is unnerving the markets? After it hit a high of 62,245 on October 19, the benchmark Sensex has lost over 3,600 points or 5.878% over the last 1 month. If expensive valuations emerged as a broad concern for the markets following the significant rally in the 10-month period between January and October, the Sensex fell sharply on Monday amidst growing concerns over fresh rise in COVID cases and imposition of restriction lockdowns across several countries including Europe. The Indian markets emerged as one of the biggest losers on Monday, as it was also weighted down by concerns over government taking a step back on its reform agenda, as the Prime Minister on Friday announced that the government would repeal the three farm laws in the upcoming winter session of Parliament. A sharp decline of 4% in shares in Reliance Industries also pulled down the markets on Monday. On Friday, Reliance Industries announced that the company and Saudi Aramco have decided to drop the latter's mega plan to acquire 20% stake in Rail's oil to chemical business to in light of the changed context. What is the way forward? While the broad domestic economic fundamentals remained intact and markets would rise in the medium to long term, they are expected to remain under pressure over the coming weeks. If expensive valuations were a concern for domestic markets, fresh spike in COVID cases across Europe and other countries and its possible impact on the pace of global economic recovery is weighing on the investor sentiment. Rise in inflation around the world and impact of proposed tapering in the asset purchase by US Federal Reserve is also expected to keep the markets under pressure for now. What should investors do? Experts say the current decline in market driven by near-term concern is something that should not bother investors too much. Market participants say as the domestic economic recovery remains on track and the pace of vaccination in India is good, market should hit fresh highs going forward. They say these dips should be seen as investment entry points by investors who are underweight equities. Thank you.